Back with Bobby and JJ Radio. We actually have a past client, good friend, go way back with Mr. Gary Rodriguez. He's with Angel Oak Home Loans. We met Gary, I don't know, 10.
It must have been about almost 15 years ago.
It has to be 15 years ago. We helped you buy your first house.
Yeah, absolutely.
Yeah, Bobby and I, we helped you out. We've seen you.
I co-signed.
Yeah, right. I think you did co-sign on that one.
To get him a worse rate? Or what?
The rate was too good.
Something along those lines.
Yeah, he's like, now you need 20% down. So we've seen you kind of blossom, man. I mean, when we met you, you were with Wells Fargo, right?
Yeah, I was with bank initially, as a mortgage consultant with that company, which is when we met, and that's when we initially, got our first house together.
For sure. And then from there, I mean, you got into the big bank game. You went into to the mortgage broker.
Yeah, I went more independent in 2010 is when I kind of blossomed out and kind of started my own thing.
And you've been killing it for like the last 9 years, I guess. I mean, so you're top 25 National Association of Hispanic Real Estate Professionals for the last years as a loan officer. Yep. Top 200 in the entire U.S.
In the country. Mm-hmm.
Yeah, and
in the world.
In the world.
And we, we kind of, iron sharpens iron, so we talk every once in a while. And you're with a really great company that I'm sure you have nothing but good things to say about it. But just like I tell my clients and other people, when it comes to loans, and I hate to use this analogy, but you're only as good as you're almost like someone at a car dealership because they're only as good as their inventory, right?
You're absolutely right.
Yeah, so like
it's all about products.
It's it, right? So if you wanted, you guys were talking about Mustangs.
Yeah, like if you're the best loan officer on earth, but you have the highest rates on earth,
or you only have cookie cutter type loans, then that's all you can do. And I don't think that consumers realize that. I think consumers think like, I like Gary, he's going to give me the best deal possible. These are all the options that I have on earth, and he's going to give them all to me at one time. But I saw you go from the traditional bank, which is Wells Fargo, and then to probably one of the biggest independent brokerages here in San Antonio.
Absolutely.
And then you're still like, no, I need more flexibility.
Yes, absolutely. So what was behind that is as I see the market is changing substantially.
Sure.
Just in general, I mean, over the past 14 years that I've been in the mortgage business, I've gone through several stages in evolution and so on and so forth. But right now I feel the mortgage business is changing more than ever. And I feel like it's important to have more and more loans in your toolbox. That's going to be able to help more clients, referring partners, and so on and so forth.
So talk about what are some of the difference between what the big banks have, maybe People's Credit Union have, or these independent loan brokers have that, or that you have that they may not?
Yeah, well, a majority of the loans out there, they're pretty cookie cutter for the most part. We call those agency loans. That's what you're going to see your Fannie Mae, Freddie Mac, FHA, VH, pretty traditional stuff. The difference between Angel Oak really is the fact that we offer more private money. So we're doing all of your traditional products as well, but we also have access to about a $12 billion portfolio that is essentially able to lend based on what we call non-QM products.
What does that mean?
Non-QM, essentially what it is a loan that doesn't quite fit the same cookie cutter mold that every other mortgage does.
So give me an example.
Who would need that? Who's the person that would need that?
So I'll tell you, the majority of the folks that do use this product are typically folks with very high credit scores. The only thing that's majorly different is a lot of them are self-employed. So a majority of folks that are self-employed don't typically always claim all of their income. That being said, they've been pretty much cut out of that segment to buy a house unless they're buying cash. Now, what we do is we have a product that effectively is able to calculate their income based on whatever their deposits are into their bank account. So we use that income, which is true income, to be able to use them to qualify on a mortgage.
So back in the day, they used to call them stated loans. Is that similar to that?
It's not really stated because realistically speaking, per Dodd-Frank in 2013 when that came out, we have to show the ability to pay. So the ability to pay is calculated based on their bank statements rather than their tax return.
Versus like in 2006, you just say how much you made. They're showing them how much they're making.
So most homeowners or most business owners, they write off a ton,
which is
so they pay less taxes.
Even us that have salary, we get reimbursements, right?
Yeah, absolutely.
And so when we show a traditional loan officer reimbursements of our expenses, that it is,
they don't know how to read them.
They're like, well,
absolutely,
that's not your income. I'm like, 100% is because we're taking people out to eat. We have leasing ourselves cars and putting miles back into as owners of a company. So we would be pretty good candidates for.
I'll tell you, absolutely.
Anytime I turn
except
over
for Bobby because he has a 540 credit score. But
Yeah,
if he can get
I
that
know,
on-
can't
but
take
the
540.
income is 7 figures, so they usually are okay with it.
is that dinar?
Yeah.
This is dinar.
So I'm going to tell you, since we've introduced this product into San Antonio, which has been about 2 or 3 months or so, it's been here on the broker side, but not really on the retail side. The difference between broker and retail is a little bit different, and we can go into that if you guys wish. But I'll tell you, a majority of the folks that have reached out to me have been realtors, and they've been able to benefit from this product.
Yeah, because their people are getting denied. They know
Absolutely.
they have a quality buyer that has an 800, 750 credit score.
Exactly.
They take them to the traditional banks, and then
What's
they
the down payment on something like
they
that?
get a no.
So it just depends on your credit. So we have products that go anywhere from a 600 credit score all the way up to obviously 850. That being said, anything above a 720, it's typically it's going to be 10% down on those. That's no MI as well.
Nice.
And those are going to range in products from, in any kind of adjustable rate mortgage or on up to a 30-year fixed.
And are they pretty like their interest rates are pretty?
The rates are pretty competitive depending upon your credit score.
So-
just like a
so-
reflection of anything else.
For anyone listening or watching on YouTube, that's huge to have 10% down with no mortgage insurance.
Exactly.
The MI, right? And because usually someone's going to have to come up with 20.
Correct.
A lot of these people feel that that's the only way to purchase a home.
Correct.
Yeah, because that'll save you hundreds of dollars every month on a home.
And then
you're
over-
just paying that insurance
Yeah.
because you don't have 20% vested equity yet.
Yeah, because mortgage insurance is when the bank takes out an insurance policy on your loan, and just in case you default and you pay it.
Correct.
And so taking that off of the table probably gives us more buying power.
Absolutely.
And over the course of a 30-year note, it's
substantial.
it's unreal.
It's substantial.
And so even if they were traditionally approved,
Yes.
and
In some cases, it does make more sense to go that route.
just because of the MI,
Absolutely.
and so are other loan officers giving you the stuff that they can't do?
A lot of them are. We have a loan officer that sits in our branch right now that pretty much works just on turndowns.
Just hey, if you can't do
That's
it,
it.
give us a try.
Yep.
So at the end of the day, they should just come to you directly, right?
Correct.
Like why go
Absolutely.
the long way around?
That's
around
that's the
410?
idea, you know what I mean?
Yeah.
Is having more products to be able to say, hey, if your client doesn't necessarily fit the mold for here, we can move them to this product and so on and so forth. We've had a couple of instances where we've had to do that, and it's saved deals.
How about people that are looking to build? Do you have anything for them?
Anything that's looking to build, we don't do construction at this time. Now it's something that may be in the future, but we'll see.
Gotcha.
And so, quick takeaway: besides independent business owners, is there any other kind of financing that you have now with Angel Oak Homes?
Yes. So another form of financing that I feel, we have multiple different ones, and we're continuously in product development.
Sure.
But another one that I feel as though is a really great product is our investor cash flow loan. Our investor cash flow loan is a very great product. It has no limitations on how many homes that you own. And it's typically 20% down, like most investment properties. The only major caveat and the major difference is they don't have to prove income. So there's no tax returns required on that product. It's basically gone off the rental schedule on however the rents are doing in that particular area that they're purchasing in. So it's purely a credit score driven, asset driven product.
So they're pretty much saying if you have 10 houses and it's 20% down, and we know you're good for it because of the income that you're bringing in from these other properties.
Absolutely, absolutely. What they're doing is they're looking at it. Let's say, for example, they're looking at a house in downtown San Antonio, for example. The rental on that area on a rehabbed house or whatever the case may be on this home that you just purchased is $3,000 a month. If that's fairly close to whatever the payment is on the proposed mortgage, then there's literally no income documentation required on the file.
Wow, that's big.
That's huge.
Because they're saying as long as you break even, we're good. Just because
Absolutely.
20% of equity is good enough, it's safe enough for us to give you the
Correct.
loan. That makes
Correct.
total sense.
And it makes total sense. It really does. A lot of these products are make sense products. So a lot of times where this hangs a lot of people up is they don't claim all the rental income on their tax returns from any other additional properties that they own, which is why they can't,
And who's
obtain
running the
financing.
numbers on these? Who's coming up with what it's going to rent for? in the future?
I'm sure
An
they-
appraiser is. Yeah, an appraiser is.
Gotcha. All right. Well, if you're a loan officer that got someone denied, if you're a real estate agent, if you're an investor, an independent
Business
business owner, call my boy Gary Rod. We call him G-Rod. You can call him at 210-421-0566. Again, call or text him at 210-421-0566, or the best website would be.
The best website would be www.theteamrodriguez.com.